Yo, what's going on, boys? Another week here. This is our third week of March. Another profitable week. We've been doing really good this month. After introducing some personal confluences and stuff like that into my liquidity supply and demand strategy. I believe a lot of people teach it wrong, but the way I've been trading it has been able to clear up a lot of things for me personally. So that's what I've been doing. I've been doing really well with it. Market conditions a little bit slow. This week was FOMC week, right? Rate cuts were getting announced, and all that stuff. So gold, Nasdaq, all that stuff's not really gonna have too much volume. And we're gonna wait for that news to come out. And it came out. It was bearish news, of course. And markets are just kind of reacting to it, dumping pretty heavy, especially on Nasdaq and gold, obviously. But Forex was still kind of pretty tradable. Today was JPY bank holiday, so I didn't trade JPY pairs. But I believe it was Tuesday we were able to catch a quick scalp on USD JPY. I'll have a trade actual recap for that coming in 2 weeks. It's scheduled, so I'll go over that, but I'll also go over every single position that I skipped this week. There's a good bit of positions, but mostly just on the drier side of the markets. Definitely this week, especially with all the news we had. I know we had FOMC one day, and then the other day we had red folder news on every single pair. So we had a lot of news this week for sure. We had to be careful in the markets, but I believe I executed really well. Hopefully we can keep that up. But yeah, I'm gonna pull up the charts. I'll pull up the Google Doc. I'll pull up the backtesting journal, everything pretty much, and show you pretty much what all we took. So yeah. All right, here we are on the backtesting journal. So I use TradeSave to kind of keep all of my journaling stuff and my backtesting stuff, and I also use it to see fundamentals as well when I'm in trades. So that helps. But this was this week, right? Saturday and Sunday obviously isn't trading days, so realistically the calendar is just Monday to Friday here. And it is kind of funny how most of the trades we've been taking is actually at the beginning of the week, so that's pretty interesting. But this week we caught this trade on UJ for 2 to 3%. I had entered this trade on a couple accounts, so it kind of varied for each account. But that was the trade this week, and this day skip losses. This day skip losses. Today I will admit there's really nothing today, so not much. Monday had nothing either. So we're gonna go over everything this week. So we have Monday, obviously nothing. Thursday, I can't remember exactly what happened Thursday. I don't know. I can't remember. I thought I skipped a loss Thursday, but I don't have it written down, so I guess not. But gold. We're gonna just start with gold, honestly. Gold was our first trade of Tuesday. So this trade was right here. So the reason I'm going over this trade is because this trade essentially, first of all, was not in my session. First, quickly, let me go over if there's anyone new here. My trading strategy is in a bullish market, we want to look for a bullish, market structure. And when price leaves lows like this behind, it creates liquidity. And we want to see manipulative liquidity sweeps of those levels. And we want to see price tap into a nice demand zone to the left. Give us that reaction, give us that, manipulative reaction showing that, hey, we're taking liquidity, we're acting strong off this demand zone to continue this trend. We took out the liquidity that we needed to take to then, continue this trend up. So that's essentially my strategy that works on the bearish side as well. There's a lot more, in depth with it as well. And there's confluences that I use that I don't personally put on YouTube yet or anything like that. So just keep that in mind as well. But this trade right here, this trade was taken by, a good bit of people actually. Now this was not my session. This was at 2:30 a.m. for me. But at the start of this box is when I started trading. If I wanted to enter this trade, retrace to get a normal entry, I could have entered right here. 100% I could have entered right here. So that's why I'm including this trade, because this is a trade I 100% could have entered on. I wouldn't get the initial first entry, but I can still get in an hour later. So that's kind of why I wanted to go over this one. So this right here, purely, so that's on the 15-minute time frame. I didn't even realize that actually. We're gonna go down to the 5-minute time frame. So 5-minute time frame, where's our liquidity? There is none. Realistically, there's no liquidity. I don't know why people took this trade. That's your liquidity. That's the distance between, bro, like that's not having an effect. I know you technically have 2 candles here as of rolls. Okay, my strategy, like the rule is like 2 bearish candles acts as liquidity. Well, you kind of have to grow up and realize like not everything's going to be mechanical. 2 bearish candles can be in the form of this, and 2 bearish candles can be in the form of, you know, massive retracements, you know, in a lot of volume, unlike these 2. Okay, so like you got to get past the mechanical point of things and realize that you have rules, but you also have to understand how to use those rules. Because if you're following every rule you have head to toe, you're just gonna lose money, realistically. Because that's what I was doing. I'm speaking from experience because that's quite literally what I was doing. But you realize, okay, there's no liquidity here. And some people see this as a demand zone and see this candle wick right here as a fake out, and then price came back down to it. I don't see that as that. I just see that price needs to take out liquidity if we want to continue, and price failed to do that. There's quite literally no liquidity here. Our only level of liquidity is right here at this nice low, and that's exactly where we chased to, and that's exactly where we manipulated. So that, in my opinion, that's just why I didn't take that trade. Zone's absolutely massive. This liquidity, there's no liquidity even close to your zone, so that's why I skipped this one. All this is price running down, kind of respecting a little demand zone, running up, filling in how price, you know, ran really hard, filling in this imbalance, and we just continue down to target the real liquidity. So that's just why I skipped that one. That was kind of a lot clearer to me. I got alerts going off, bro. Anyways, that's that trade. So that's why I skipped that one. We're gonna go over the other ones here though. GJ, skip this trade as well. So this was this one you would have had to enter aggressively. What day was this? Tuesday, I think. Yeah, Tuesday, okay. So this trade right here, you would have had to enter aggressively. In my opinion, this just wasn't a deep enough retracement. There's a lot of, you know, in-depth stuff why actually I knew price was going to retrace to kind of this specific level. But if we're keeping it simple, demand zone, you have your level of liquidity. Okay, now this is an accuracy demand zone, which means, you know, you only draw it by the wick. I mean, you only draw it by the body because the wick is higher than the candle next to it, which is the bullish candle, to consider it a demand zone. So we only draw this box by the actual body to the bottom of the demand zone wick. So that's that trade. And, you know, if you were aggressive with it, price tapped in, and, you know, this is a 30-minute candle, you could have entered break of candle, and I know people that entered break of candle here. That's the only reason I'm you know, kind of going over this trade. And that's that. But like, look at this. Markets are trending up, nice retracement. Trend up, nice retracement. We trend up. Why would you think we're just gonna get a retracement like this and continue up? We're gonna get a normal size retracement, and then we're gonna continue up. Like, so that, like, if you just look at it like that realm, that type of realm of things, like this isn't enough liquidity to take and continue this bullish trend up. It's not enough at all. So, and I also kind of, you know, had some other reasonings that we were gonna come down to fill in this level of price right here. But regardless, that's why I skipped that one. Just wasn't really a big enough retracement for me. Wasn't enough liquidity for me. That's kind of what I didn't like about that setup. So that was that. We have a Euro JPY trade. Now this trade I made a 10-minute long video live as this trade was playing out, explaining why this trade is going to lose and exactly where we're going to target and why we're going to target it, most importantly. And that video, I'm just kind of loading them into the Discord that I'm working on right now. But yeah, it's pretty cool, you know, when you have an actual understanding of the market and you're able to call price and explain why it's going to, you know, chase these levels. So, you know, just putting that out there. Market's kind of bullish right now, so that's one thing. Okay, keep in mind, that's one thing. But a lot of people trading normal liquidity supply and demand, they're going to see this. They're going to see, hey, price just broke out these last 2 lows. We have beautiful liquidity right here for the supply zone. We just broke out these last 2 lows. Great liquidity. Market's switching to bearish, and this is a great short. but that's not how it works. That's not how the market actually works. There's a reason we took these lows the way we did, and there is a reason. It's funny. Well, I don't know who all follows me on Instagram, but I posted this on my Instagram, a before picture and an after picture, exactly where price is going to retrace to, and exactly how we're going to come up. And that's essentially exactly what we did. And yeah, I pretty much skipped this trade because we were still bullish, and there was reasons for price to go out and take this high right here rather than react off this high and take this as liquidity. So yeah, I skipped this one as well. And this is, what the market throws at you. It gives you two beautiful candles with, amazing volume. It looks like, you really want to enter, right? And it will really, if you don't have strong psychology, you're going to FOMO into these trades because they look amazing, right? Live markets, I was watching them and they're just rejecting, and then boom, like coming down super hard. What happens? Price comes up to take out this level, because that's a real level of liquidity. And I have reasonings for that, but again, I don't put these in the YouTube video. But yeah, price comes down, taps in, to kind of this imbalance, and price runs up. But yeah, that's pretty much that trade. And overall, we were bullish anyways, so like it's kind of obvious there. So that was that trade. What is this? AUD JPY. Yeah, we're gonna go over this. We'll go over the winning trade last. This trade right here was mainly because of like a couple reasons, but what I'll go over here is that you can see how bullish market structure is, okay? See how bullish market structure is, and then you can see how we just start losing steam in a straight sideways movement. That's essentially all we're doing, right? Straight bullish market structure, and then we just start moving sideways and sideways and sideways, and we're chopping all day long. And this is the day of FOMC as well. Not that this is a directly correlated pair by any means, but we had a lot of, outside news this day as well. And, this was your liquidity. This was price taken out its own low. Price tapped into the supply zone. It's an accuracy zone as well. No, it isn't. I lied. Wait, hold up. Maybe the setup was right here. I messed up. There you go, boys. Anyways, liquidity right here. Liquidity, price took out its own low, and price, comes up, gives you that entry, right? Because all we're doing is reacting off a demand or a supply zone, and then price stops you out. Because main reason is this just choppy like this. So you see how price, starts losing steam, and you can be like, okay, prices, might continue bearish. 100%, right? You can 100% do that. The main reason I just didn't take that is the confirmation wasn't there yet, and second, all of the news. It was so like this was the market structure coming into the day. This. I'm not trying to trade this. Nothing's clear to me. Okay, so I'm not trying to make it clear to me by placing a trade and hoping it goes in my direction. I can understand and look at this chart and understand that this is straight sideways movement. I'm not trying to take this, and that's exactly what happened. Okay, price tapped into this zone and gave you that entry candle, and then it just stopped you out. So that's that. Now for the trade, I did hit. This was kind of the only trade that I liked. This God, dude, I keep getting notifications. Trading view alerts are going off. Anyways, main reason I liked this trade was because this is the only clear one that we had this week. We had higher time frame analysis was just bearish. Okay, internally we're just bearish, and it's a beautiful trade, right? We have a nice supply zone. Price comes down. We have beautiful liquidity. Price comes down, makes another low, and we retrace. And what do? Well, we just take out that liquidity to then generate. Oh gosh, my mouse just take out that liquidity to then generate orders to then continue to the downside. So. And this was an hourly candle. So this has a lot of volume when we open up, right? Price runs up, takes out the liquidities, taps into that supply zone, and we start instantly flipping. Now I got in kind of on that flip. The one account got in, a little bit later. You had to be really, really quick with this, but that's what these, setups throw at you. You got to be quick because it's a quick manipulative liquidity sweep. We're not just going to be hanging around here all day and just take out this liquidity, and next candle opens and gives you, I can't draw for anything, bro. I need like, I don't know what I need, but I can't draw anything. Going back to my point, price isn't gonna just calmly take out liquidity and then give you a nice, you know, bearish candle to enter on and stuff like that. I still can't draw, I give up. Anyway, you guys get my point. It's not gonna be a nice, slow little movement. And if that's what it's giving, 9 chances out of 10 is because we didn't take an important level of liquidity, because if we did, we would take it manipulatively. We would take it fast and continue in the opposite direction. So, you know, keep that in mind as well. But we take out that liquidity very quickly and just instantly run down. And the second this candle flipped to bearish, which is a flip entry on an hourly candle, new hour candle on the 5-minute time frame, I entered short. And I was targeting these lows down here. There's something to the left as well I was targeting, but you can kind of see how price started finding support here, and then we eventually broke past that and we continued down. So that was, you know, that was that trade, and that's all I wanted off of this, because there was news coming out as well, and there was a lot of support. First of all, there was a lot of support here, okay? Second of all, there was news, red folder news coming out, or no, it was actually orange folder news, but it was still news that I believe was going to affect, because it was I think it was unemployment claims, but I thought unemployment claims was red folder. Maybe it not. Maybe it wasn't unemployment claims. It was something that was coming out in like 30 minutes. So that was another reason I kind of closed. And again, you know, quick 2 to 3%. It's kind of all I wanted off this trade. And, you know, there's a strong reason why I was targeting, you know, stuff to the left. So that's kind of all I got out of this trade. You know, wasn't trying to be greedy. And higher time frame also, really higher time frame was bullish. So like this trend, right? This trend down could have easily, you know, kind of flipped around here and continued up. We don't know, right? Ended up continuing down just a little bit more before we went and took out that high. So, you know, that's something else you kind of got to keep in mind there when you're shorting against higher time frame trend, because it can easily turn around and you know, bite you. So you got to be careful there. But that's why I targeted that level. And yeah, we'll see what next week brings. We're not gonna have FOMC at least. That was a big thing this week. So hopefully, you know, NAS gold makes some good market structure, because it hasn't been recently. It's been just sideways movement. Finally breaking out to the downside here after this news. So yeah, that's pretty much it there. Yeah, other than that, that's pretty much all the market offered this week. You know, one good trade, 2 to 3%. You know, take it, get out, and you know, I didn't see anything else I liked, so I stayed out, and really nothing else won. So there was a position on Euro JPY, I believe, that actually won, but market structure was really not clear. Liquidity was, the way it came back to the zone, really not, you know, ideal, and stuff like that will mess with you. You know, you don't want it to mess with your brain, because you're gonna see that and be like, oh, like if you start taking setups like that, they're low quality setups. Even though a setup wins doesn't mean it's high quality, right? So if you start taking setups like that, nothing is gonna differentiate. Nothing's gonna be different from me taking a setup like that and then taking setup that I showed you that all lost this week, right? So like you have to draw the line somewhere, right? And not every, you know, again, setup that wins is good quality. Eventually you're gonna have some setups that are just mid, right? And you know, you'll skip that one and that one won. But you also skip trades that look just like that, you know, 6 times this week, and they all lost. So like you have to, you know, understand that in your brain, because that's gonna mess with you. Psychology, I'm past that point now, but that definitely used to be me 100%, and that's why I was taking a lot of low quality stuff. So yeah, that's pretty much it for today. And yeah, it's Friday, so I'm gonna go edit this, post this on YouTube. We get some cars detailed today, get some more work done, and that's pretty much it. I will see you guys next week. I have some videos scheduled for next week, and we'll go over next week's weekly recap, see what we get for March as well. Things are going great right now. Hopefully, you know, we can keep that up this year and stuff like that. But yeah, that's pretty much it, boys. So I'll catch you guys on the next one. Thank you for watching. If you have any questions, comment. If I missed any trades, comment. You know, do whatever. But thank you, boys, and I'll see you guys in the next one. Peace.